Welcome to Subramani. My throat is a little bad, so you'll have to bear with me. So a friend of mine was asked to serve food to people in a temple. So he was serving food and the priest came and said, that man sitting in the corner, you should serve him double of what you're serving the others. So he said, but why? He said, no, he does nothing. So this fellow was more intrigued and he said, he does nothing, why should I be serving him more? He said, because sitting idle doing nothing is very difficult and he's doing that, so I think he deserves more, so you should serve him more. So our friend says, I can also do nothing. So he says, okay, come tomorrow morning and sit here doing nothing. Sorry. So our friend goes there in the morning, sits there for 5-10 minutes and comes to the priest and says, do I have some work to do? He said, no, your simple task is to sit there doing nothing. So after about an hour of agitation, no phone, no television, no newspaper, no external stimuli, is to just sit with himself. He found it very difficult. He comes back and confesses, says, I can't do it. So he said, well, that is the reason why I gave him double of what the others got. Because I'm like the market. I reward people for sitting there doing nothing. Now, investing is definitely difficult. But sitting tight during bull markets, sitting on cash, doing nothing is far more difficult. Because everybody else in the market is saying, I'm not buying because I don't have money. You are saying, I'm not buying because I don't know what to buy, right? Well, when you say you don't know what to buy, it just means you don't know what to buy afresh, because you have an existing portfolio. You haven't decided whether to put money in equity, gold, US markets, Chinese markets, Japanese markets, which market, equity, what you want to do. You are unable to decide, rather than saying there are no opportunities. Because if you thought the market was overpriced, you should be selling and moving completely into cash. None of us ever do that. And if you think it's worth buying, then you should just go and buy some of your existing shares. Right? If let's say you have Bajaj Auto, or let's say you have HDFC Limited, then what is your, why use your brain? Or TCS, why use your brain? Just go and buy more of it. Because if you think holding 430 TCS is good, then holding 440 TCS is also good, and holding 800 TCS is also good, right? Unless it puts your complete portfolio out of whack. So, largely when you say you don't know what to buy, you mean you don't know what to buy new, because you do not know how much more to diversify your portfolio. For example, 80% of your money or 90% of your equity money is in India and a little bit of it is in US. You're now wondering whether to add China to your portfolio or whether to add Japan to your portfolio. That is also your thinking and wondering. And during such times, you will be sitting on cash. Sitting on cash is almost always a negative decision for people, saying, I don't know what to do, therefore I'm sitting on cash. I have cash, I don't know what to buy, therefore I'm sitting on cash. I don't know where to invest. Even if I know where to invest, I don't know which particular share to buy. Should I buy Apple? Should I buy Alphabet? Should I buy Netflix? Right? You're unable to give an answer to yourself, and therefore you don't know what you are sitting on cash. The other reason to sit on cash is for waiting for some great event to happen, because of which you will be able to deploy that cash. Now such events do not happen very often. For example, we are right now in a bull market, and every bull market ends badly. So yes, you will see from the Sensex of 53,000, you will see definitely a fall, maybe to 4,000, 48,000, or maybe to 43,000, or maybe even to 38,000. Are we ready for it? If we are ready for it, then you should not be cribbing about the cash. Keep on building cash. Put it in a ultra short bond fund and let it grow. You will get 3-4% return, not more than that. But I don't know whether you are keen to put it in, say, a credit risk fund. I have money in credit risk fund, and I very simply believe that if money lies in credit risk fund for 3, 4, 5 years, after that the risk keeps going down. and then it becomes like a savings bank account. Whenever you want, you can withdraw. So I keep money in credit risk fund also, apart from keeping money in ultra short bond fund. So what to do? Sitting tight because you don't know what to buy means you're not respecting your existing portfolio. Let's say you have HDFC Limited and now you're saying you don't know what to buy. So which means you do not even know whether HDFC Limited is worth holding. So whatever is in your portfolio, you assume let it be there. But fresh, I do not know what to buy. That is wrong, because you should be willing to buy more of your existing shares, because why are you holding it? You're holding it because it's good, right? Or you're holding it because it's great, right? If you, the very basics of decluttering, when you look at a share in your portfolio, you should feel excited and you should know the purpose why it is there, right? Now, therefore, you have some shares, say 20 shares in which you have invested. Maybe there is an indigo in it where you look at it and say, I'm not sure, the lockouts are still happening. Lockdowns are still happening. People are not traveling. So should I hold on or should I just exit, right? It's a question which you keep asking yourself, but you do not know whether to buy. That's fine, but you do not know whether to sell. That's also okay. There are times when you need not make up your mind. But there'll be some other share which you think are worth buying. Let's say there's some fertilizer share or a banking share or an insurance share. So you say, oh, HDFC life insurance looks good. Let me buy more of it. So some opportunity will always be there. But if you think that is also not there, and you're waiting that I think next quarter results of HDFC life insurance and other insurance companies will be bad because of the third wave, second wave, whatever, and I will buy then when the price falls below a particular threshold level, because then there'll be more triggers, more people will sell and I will be able to buy. Perfectly right. So therefore again you're sitting on cash waiting for an opportunity. You're waiting for cash, again is a transaction opportunity. Sometimes you might get some distress sale. Maybe somebody comes and says, I have a house to sell in Khandala and I want to sell it at the same price at which I bought 8 years ago or 7 years ago, and you wanted a second house. That could be an opportunity. So cash always gives you the options of which market to move to and at what speed to move to. Should I move to US? Should I move to India? Should I move to China? Should I move to equity debt? Should I move to gilt, or should I move to corporate, or should I go take higher risk in credit risk, right? All these options are available, but more or less sure it will give you a negative return after say 6 months, 3 months, whenever, because it's lying in the savings bank account, or maybe it is in the ultra short bond fund. But one thing is for certain, that if you think you're going to, the option is between sitting on cash and losing money, then sitting on cash is a better option. One more problem is my broker always used to tell me that पैसा तुम्हारा क्या काटता है क्या savings bank का पैसा, right? So very many people will be itching like that, or they'll call you and say, oh, I have sold some property, I got some 12.2 crores, where should I deploy? नहीं अभी market अच्छा नहीं लगता है, नहीं यार कुछ तो होगा ना, एकदम solid बोल, you know, TCS, HDFC ऐसा कुछ एकदम solid बोल. But these guys are not really willing to lose 20% of their capital. Then it's not, maybe not the best time to be entering the market if you don't know the risks in the market at a high level. So maybe for you an ultra short bond fund and an SGP from there over 3 years makes more sense, because this amount is equal to the rest of your portfolio, or maybe it's much more, right? So depending on the size of your portfolio, depending on the immediacy of needing the money, or dramatically lower your expectation and say, ठीक है, cash काटता तो है नहीं, 4% देता है, 3% देता है, 4% return I'll get in an ultra short bond fund, I'll withdraw after 3 years. In the meanwhile, if I get some opportunity, I'll buy, otherwise it's okay. It is perfectly alright to target cash collection also and say, till I reach 50 lakhs, I'm not going to worry about it. So keep watching your ultra short bond fund and keep putting money into it like how you would put money into an RD. Just keep on putting, whenever you have money, you keep putting into it. After it reaches 1 crore, 1 crore is just a number I picked up. It could be 5% of your portfolio, it could be 1% of your portfolio, whatever. After it reaches, you at least feel, I had to achieve something, I've achieved. And you may or may not deploy it immediately, but at least you had a target, you achieved that, right? So sitting on cash is not very easy. It is difficult, but it pays off dividends very, very differently than your IRR and all that, right? So you could get a chance to buy something and sell something. You get a trading opportunity, right? All those possibilities are there with cash. Understand the significance of cash in your portfolio. It protects you from the downside if there is some bad news. Suppose you're sitting on 1 crore cash and there is further bad news that China has released one more version of its great virus. Markets crash. Great time for you to be buying, but that is sheer luck. You did not know this was going to happen. But yes, I can assure you, in this market over the next 10 years, there will be many 10% falls and 1 or 2 big 30-35% falls. On that day, if you're ready to invest, accumulating cash is not a bad idea at all, in spite of the negative interest rates. Thank you.